Well, the beginning of this decade saw many big Indian companies raising money through the overseas route, signaling a lack of confidence in the domestic equity market. But through the course of the decade, initial share offers seem to have captured the imagination of every company, big and small. More than 2 lakh crore rupees have been raised through this route in the last 10 years, and the next 10 promise to be even more exciting. Nikhil Namdar has this report on the decade that was.
It was a decade that saw the Sensex climb from the 5,000 levels and breach the 20,000 points mark. And coinciding with this meteoric rise in the secondary markets was the evolution of a robust primary market. More than 400 companies raised over 2 lakh crore rupees through the IPO route in the past decade. While the first 3 years of the decade saw a lull as far as IPOs were concerned, given the backdrop of the dot-com bubble and the Ketan Parekh scam, the iconic Maruti IPO in 2003 kick-started the government's divestment agenda, thereby beginning the process of unlocking value in some of India's best-run public sector companies. The real traction though was seen between 2004 and 2007 as FIIs pumped in money into Indian equities. Not only did PSUs like ONGC hit the markets, but some of India Inc.'s biggest players like TCS, the erstwhile Reliance Petroleum and Idea Cellular emerged on the scene.
Between 2004 to 2007, I would like to call it as the second phase of this decade. I think it has seen fantastic times.
While 2007 was a spectacular year for companies wanting to raise money through the IPO route, the big defining moment was the 11,000 crore rupee Reliance Power IPO in early 2008. While on one hand it triggered retail participation in a big way with a flurry of demat accounts being opened, the big listing day crash in some sense set the tone for the next 2 years. As the global financial crisis hit the Indian shores, the markets tumbled, and if 2008 was bad, 2009 was lackluster to say the least, with barely 20 companies managing to go public. Come 2010, it's been a bumper year for the primary markets in India. More than 70 companies hit the markets, raising a whopping 71,114 crore rupees in just 1 year. And pushed by the government's divestment agenda, it was the public sector behemoths that unlocked value, constituting a lion's share of 70% in the total money raised, with Coal India, Power Grid and MOIL becoming the first public issues in Indian history to attract applications in excess of 10 lakh each. Interestingly, it was a varied mix of companies approaching Dalal Street. From green energy players to microfinance and fitness companies, it was these out-of-the-box new age businesses that dominated the IPO market.
You're going to have a very wide variety. I think the message from investors is very clear. Show me a compelling investment proposition and I'm there.
As we enter the new decade, the government's divestment program as well as the impressive rate of growth in the economy will mean that more and more companies make a beeline to raise money, with over 100 of them lining up in 2011 alone. And who knows, if all goes well, the IPO party may just continue into the next year and the next decade. In Mumbai, Nikhil Namdar, NDTV Profit.